Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of April 14th, 2025. Let's get started. SEAF signals for this week. We have XLF, XLU, and XLP, financials, utilities, and consumer staples. Financials replaces healthcare, which took a little bit of a header after what was quite of a wild week. As you can see here, a little bit of reconfiguring of the model as technology and communications services bounce off the bottom, and we retain utilities and consumer staples, really from some strong tactical month and strategic quarters. Same thing with financials, strategic quarter, tactical month showing some strength overall. Again, like I said, wild week last week. Energy replaces technology as the bottom with 11s for the tactical month and trading week, and 10 in the strategic quarter. And materials drops down to second to last with overall weakness through 3 time periods. Again, looking at both technology, communication services, and then also seeing some strength in consumer discretionary. Likely, try not to speculate too much and really drive by the numbers, but likely have to do with the pausing of the tariffs, which is allowing for both, our offensive sectors to start to move up the board. We will see kind of where we are. We're going to need a little bit more than just 1 week. As we kind of bop into the heat map next, really seeing, like I said, a little bit of weakness up top. Maps a little bit all over the place. Energy coming in with the dead last, negative 1.1% on the trading week, really driving down the overall tactical month and strategic quarter with really some kind of weakness there. And then looking at technology coming in real strong at a 1% move on the trading week, and not to be outdone, but a 0.21% for communication services. And again, seeing a little bit of resurgence both in the consumer discretionary and industrials. Interesting enough, though, the defensive stocks, we didn't have any outflows. And what that screams to me is that managers aren't 100% sure that we are not needing to be defensively aligned. Consumer staples, utilities, and financials almost net not changed. Very close to zero, which is why we're seeing that yellow color. That tells me they're not ready to sell off those positions that they started to build up with the tactical month and the strategic quarter. They did definitely reallocate into technology communication services, and we'll take a little bit look in the rainbow charts in just a second. But overall, seeing a lot of unique movements last week. Just a couple of highlights on the numbers. We had 3 of the 5 days were down last week, with down percentages of 1.5, 2.09, and 3.2%. And this is when I'm saying down, I'm saying the net. If you add up all 11 sector spiders and you kind of look at the day-to-day percentage changes of adding up all of the total net assets for the 11 sector spiders, that's what these were. We also had an up day of about 8%, and we were up on the week of 2.2% in terms of net flow. So adding up each different change date. One thing I did want to highlight, and I've mentioned this number before, but there's this peak number of about 300 billion that we hit on 3/24 of 2025. Even with all the buying back last week, like I said, we were up 2.2% in terms of the assets under management for the week. We are still about $30 billion off of that after the sell-off over the last 2 weeks. So just to kind of level set, a lot of money flowed out of the 11 sector spiders, and then we have seen a bunch of money flow back in. Like I said, we had an 8% day. I believe it was Thursday of last week, but we are still 30 billion off that mark. So all that money that came rushing out has not fully been redeployed yet. That's not necessarily tradable or actionable, just interesting to see how these monies have flowed, especially with the aggressive volatility that we saw. Heading into our rainbow charts, I wanted to just highlight financials. Financials has been a nice relative outperformance trend, really going back to January of last year. We have spent some nice time in the upper favored ranking, a little bit of a dip here on that sell-off, but still in that upper favored, seeing some nice continued relative outperformance in financials. We had a little bit of that dip on the sell-off, but have rebounded slightly. Looking at technology had a massive inflow, right? So we're sitting into that, low favored, high neutral area. But this is after, really kind of steep decline in technology in terms of its relative performance versus SPY. We will want to see some sustained flows out of that for more than just a week, which is why obviously it's not a SEAF signal this week. But, as we start to peel off some of the avoid numbers as they start to fall off that back end, seeing technology kind of resurge. Again, I need another really strong week out of technology to get it in that upper favored, and hopefully we can break into seeing some nice relative outperformance. Right now we have a little bit move off here off the bottom, and it's kind of a wait and see. Utilities, not that stark uptrend that we've seen with financials, but also nice relative uptrend in utilities. We had that little bit of a deke here with dipping into neutral, but since we've been upper favored, we've had some nice relative outperformance, even with that little bit of a sell-off last week. So utilities looking relatively strong. Going in, also looking at communication services. Communication services spent some nice time in favored. We got some nice relative outperformance. We went a bit sideways here as we've dipped into neutral, made a little bit of an attempt to come back up, back into a void, and now we're headed in that neutral, or up into that, through that neutral into that favored. Again, depending on where the analysts and the traders see where this is going, we would like to see again another 1 or 2 weeks of that positive flows to kind of generate us into that upper favored to really give us that acceleration for our relative outperformance versus SPY. Right now, we're a little bit of a sideways pattern here, even with us moving up into favored. So again, another strong week out of communication services could vault us up into this upper favored, and we could start to see that relative outperformance. But overall, communication services still seeing a nice little bit of an uptrend going back to August of last year. Last but actually least, looking at energy. Energy's got a unique pattern. It seems that there's been attempts to buy the dip here multiple times, where we've had a low in relative outperformance, try to really accelerate up. We touch favored for a minute and then it comes back down. We seem to have found that pattern again as we have come up into favored, come back down. Now we've really dropped down in a deep void, which has resulted in really deep relative underperformance versus SPY. So, a lot of buy the dip attempts and energy, but has not had that sustained upper favored ranking for long enough period of time to really get that sustained relative outperformance to kind of dig us out of this hole that we have, energy has dug itself into. So, right now, definitely avoid energy. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.